Yes, very good evening, my dear students. Say good evening. Right, come on. So first of all, welcome you all to the discussion about our indirect tax amendments for CMA final examination for June 2026 attempt. Now the point is very clear that during our lectures, during our sessions, we spend a lot of time on various interesting topics, starting with what is GST and going forward to the discussion about section 7, our favorite section called supply, where we discussed that supply word is something what I like a lot. The reason because the entire GST revolves around this word called supply. We have topic like time of supply, value of supply, place of supply. So everything is revolving around supply. And we have some important areas, elements like input tax credit. So a lot of things are evolving. Today in this fast moving environment where a lot of AI things are happening, it is important that we should get knowledge. Generally, sometimes students come and ask me some questions like, AI is developing so much, so many GPT platforms have come up. After passing, what we'll do? Now the whole logic is very simple. All these AI platforms, I did not name, there are so many. Any AI platform, whatever you talk about, it gives output clearly based on input what you give. So there is one statement called garbage in, garbage out. You know that, right? So what input you give it to it, similarly the output will come. So what prompt you give, based on that only answer will come. So according to me, AI will not replace a professional, but professional with the support of AI can perform better. That's very clear. To run that AI better, professional is required. So never have a mindset called AI is developing so much, what will we do after qualifying? We have a lot of work to do. To run that AI, a machine can run only when we operate properly. Correct? How much our robo is important, it is even more important that there is a right person who is able to operate that robo. Agreed, my dear students? Everyone, sir? Done. I'll not take much of your time. The fundamental purpose of meeting today and spending some time is basically to understand the interesting amendments applicable for June 26 examination. During the lectures itself, I told you very clearly that whatever content we are learning will definitely be the same, just that few interesting points here and there will change. And as rightly expected, our institute has released a supplementary study paper. In fact, this material handout, what I gave it to you, is based on the institute that supplementary study paper only, but I compress that in a simple format, in a simple language. Wherever it's not relevant for you, that areas I have removed. What is relevant, I have simplified that and I gave it to you. And a lot of places the language has been changed, but the content crux is involved there. Are we clear? Everyone, sir? So we are going to get two advantages out of this session. Advantage number one, we'll be done with all the amendments of June 26 examination. Whatever institute expect from us, we are ready with it. Second, we'll also be able to recall and revise what we have done. One way that is also helpful for us. Agreed? Yes, everyone? All of us? Good. Very interesting. Sir, let me honestly tell you, in your group 4, indirect taxes, indirect tax laws is one such paper which is actually a very helpful paper for scoring some better marks. Because I really don't look at this paper as a passing paper. I really look at this paper as one such paper where you score some bigger number so that some other paper something goes wrong, it will add more value. Other papers also performing very well, everywhere you get good marks. And if you're planning for your AIR, this will support a lot. Correct, no? And people who are AIR, people who are rank holders are not coming from top, not coming from bottom. Straight, simple answer. They are just like you. The way you work hard, they also work hard. They might be sitting right in between you right now. That names will come out later on after results will come. So it's very much possible. Not that it's not possible. Clear? Not just one name, two names. We have so many names here. Which name will work out, we never know. And logic is simple. If you look at an AIR and plan for it, then passing is for sure. Like there's one saying, if you want a 9th mile, you aim for 10th mile. Correct? No, I've seen that. Yes. Understood. So clear? So work towards it and do it. Make sense, guys? Done. So before I proceed to this, a small thing. As you remember, if you remember, this is our syllabus. What we spend a lot of time during our lectures and discussions, where we cover a lot of interesting aspects. So I would like to take some 10-15 minutes time On recalling the provisions once, important parameters I'll highlight and make your brain slightly activate so that you will recall. Now students should not ask a question, sir, what if brain is completely switched off? We'll fix the battery, don't worry. Okay, my dear friends? So I'll spend 10-15 minutes time here. After that only, I'll go to amendments. If you are okay with it. If you tell, sir, all that we don't want, you tell amendments, you tell bye-bye, we'll go, then I'm okay with that also. But you know very well which option I will choose. Then student will ask, why did you ask then? Just like that. Okay, sir? Done, sir? Can I proceed, sir? Thank you, sir. So the first topic what we covered during our sessions was supply under GST, a refresh. The chapter name only says a refresh because this was already there in cmainter. A refresh pattern was there in CMA final with some more elaborate discussion about some interesting case laws like switching over electric power limited, where we discussed about UPS external battery which was there. We covered about something called rice, 25 kg, 26 kg. That discussion we have done. We covered about the concept of section 7 supply, where we discussed schedule 1, schedule 2, schedule 3. Schedule 1 spoke about transactions regarded as supply even though there is no consideration. Schedule 2 spoke about what is supply of goods, what is supply of services. Schedule 3 spoke about transactions which are neither regarded as supply of goods nor regarded as supply of services. So like this we spent some good time there. We spoke about MPs, MLAs, public servant, land and building, actionable claims, betting, gambling, lottery, online gaming. We covered so many interesting points there. And we have also covered some interesting elements in neither supply of goods nor supply of services. Last 3 points, something like high C sales, warehouse goods before home consumption, out and out supplies. Remember we covered these points? Yes. After that, we have also spent some good time on discussion about section 8, composite supply and mixed supply. There also we spent some time. And in this topic only, we discussed about some interesting aspect called composition scheme, section 10, where we learnt about something called section 10.1 and 10.2, other side section 10.2a. 10.1, 10.2 was for 3 categories of persons: manufacturer, trader, restaurant and catering service provider. 10.2a is for any other service provider. And 10.1, 10.2 the limit was 1.5 crores or 75 lakhs. Here the limit was 50 lakhs. And there the rate was 0.5 plus 0.5, 0.5 plus 0.5, restaurant 2.5 plus 2.5. And there it was 3% plus 3%. Remember all these points we covered? And there we covered one more special point called if you are a manufacturer or a trader or a restaurant catering service provider, you can also provide some other services and can still continue in composition scheme, provided that value of some other services is not more than 10% of turnover in state during preceding financial year or 5 lakhs, whichever is higher. Slowly some brains are activating. Half of them are reacting. 25% are seeing my face and smiling. Yeah. And balance 25% are seeing here and there, seeing their friends. Oh, he taught this? Oh, okay. Here only. Me only. Same building. Thank you very much. Come on. So that was the points what we covered there in composite supply and mixed supply, where we covered in composition scheme. Apart from composition scheme, in this topic, we have also spent some good time on discussion about one more interesting area called exemptions. What was that? Exemptions, where we covered various exemptions. As I told during the lectures, and I'm telling now also, that don't try to mug up exemption. In exam, your fundamental objective should be very clear that they give a point, you should be able to tell whether exempt or taxable. Like they give a point like healthcare services, 6,000 per day. If they tell ICU, you tell exempt. If they tell it is not ICU, it becomes taxable, because we know the concept called 5,000 per day. And if they tell cosmetic and plastic surgery, answer is taxable, but if it's a part of treatment, it is exempt. So like this, some areas are there. See, some of them would have not revised, but now they are recalling because we are able to activate it. Straight simple answer. Like that, we also covered some interesting concept in agricultural produce, where we discussed that all animals we have exemption except for, see, very good. Then we discussed one more point called exemption is for warehousing of agricultural produce, but renting of warehouse is taxable. Very good. Then we discussed about something called old age home. If it is not more than 25,000, it is exempt. Then we discussed about something called entry ticket. If it is more than 500, taxable. Up to 500, it is exempt. But for zoo, tiger reserve, national museum, wildlife sanctuary, whatever is the ticket price, it is exempt. Remember that? Then we covered some important point like services of player, umpire, referee, coach, team manager is exempt. But commentator will become very good. We covered that point also. And we covered some interesting point related to educational institution. Services by education institution to students, faculty and staff is exempt. And services to institution is exempt, where we covered some 4-5 points. Transportation, catering, security, cleaning, housekeeping, conduct of examination, supply of online journals. We covered. We prepared some table for this and we have discussed some questions as well. It's all there in the materials as well. Clear, friends? Like this, we covered some interesting exemptions during our discussion. But in this exemption, 1-2 points are added, which we'll talk. But I'm sure you all know that exemption is nothing but exemption related to life insurance and health insurance. I'm sure you know that, because in fact, during class only I told you that. Life insurance, health insurance, they gave exemption from September 2025. But so far, Institute has not yet given that in your material. If they give in statutory update, that time I'll tell. One fine day I will tell, I told you. And that fine day has come. It came. Is that clear, sir? So like this, I'll spend a little bit time and discuss few interesting areas there. Clear? And in that first topic itself, we covered some important section called section 9. Charge of GST, where we spoke about 9.3 notified RCM, where we covered some interesting point related to goods, related to services. Goods, we spoke about cashew nuts, not shelled or peeled, BD leaves, tobacco leaves, raw cotton. Correct, right? Essential oils, metal scrap, priority sector lending certificates. Very good. Good. And in services, we covered so many points like GTA, insurance agent, recovery agent, renting of motor vehicle, sponsorship services. They covered, no, sir? So like this, so many points we covered in RCM as well. There we covered some important area called section 9.5. In case of certain notified services which are supplied through e-commerce operator is liable to pay GST. And if e-commerce operator does not have physical presence in India, their representative in India is liable to pay GST. And if there is no representative, they must appoint representative and make him liable. There we covered some 4 points we covered. One was about transportation of passengers, radio, taxi, motor cab, maxi cab. Second was about hotel accommodation. Third was about housekeeping. Fourth was about food, restaurant services, except specified premises. What is a specified premises? 7,500 per day room is there, then they will only pay tax, not e-commerce operator. In this concept, one more point also added, which I'll discuss with you. Clear, no, friends? I'm sure you understood the purpose behind which I'm revising. Clear, no? Not for fun, not for time pass. Clear? Can I proceed next, my dear friends? Done. Next topic what we covered was about time of supply. Time of supply, we covered some important sections like section 12, 13, 14. 12 related to goods, 13 related to services, 14 related to change in rate of tax. Very good, excellent. Friends, what was 12.2, sir? General rule, which says always date of invoice. 12.3 RCM. 12.4 vouchers. Supply identifiable, not identifiable. Remember that? What? Forgot that? Very good. Forget it, no problem. Because section 12.4 has been deleted from syllabus. because Act has removed that section related to vouchers, which I'll discuss in amendments. Some are telling. Section 12 gone, sir? 12.4 is gone, not 12. Okay, my dear friends. The moment I told deleted, we want more. Next, 12.5 was residual case. 12.6 related to addition in value by way of interest, late fee, penalty charged by supplier from recipient. 13, same like 12, and 14 was about change in rate of tax. Service before, invoice before, payment before, this after, all that done, no, sir. Sir. Clear or not? Sir. Tell, sir. Thank you. Next. Place of supply, something very important. We spent some very good time there, telling very clearly that it is not dealt by CGST Act, it is dealt by IGST Act. 10, 11, 12 of 13 of IGST Act. 10 was related to goods, 11 was related to goods imported and exported, 12 related to services where supplier and recipient both are in 13. Supplier or recipient, one of them is outside India. We prepared some tables and summary in the classroom. Please go through that, an important topic. Almost every time a question will come in the examination. Gunshot. Next topic. 100% again question will come in the examination. What is that? Valuation. Valuation, we covered some important section called section 15. Section is only one, but we cover a lot of rules there. Correct? 15.1 says transaction value. 15.2 was inclusions. 15.3 was exclusions. 15.4, if transaction value is not acceptable, go to rules. 15.5, notified supplies, will go to rules. Let's once recall the heading of the rules. Ready? Rule 27. Consideration not only in money. Rule 28. Supply between distinct or related persons other than principal and agent. Somebody was saying 110%, wrong answer. 28 is distinct or related persons. 29, principal and agent. 30, 110% of cost, very good. 31, best gentleman proper officer. 31A, betting, gambling, lottery, horse races. Correct, no? There we covered some important concept called, in case of betting, value of supply is 100% of face value of bets. Correct, no? In case of horse race, what was the answer? Amount paid into totalizator. Very good, excellent. Lottery ticket, 100 by 128 of the face value of ticket, or 100 by 128 of the price notified in official gazette, whichever is higher. Let me tell you, in this also there is an amendment. That 28% became 40%. So when 28% became 40%, it will not be 100 by 128, it will be 100 by, that's it. That's there in the handout what I gave you. I'll discuss. We'll go through that very detailed way, but I'm basically making you ready. Net practice is going on. We'll play the match. Okay guys, done. That was rule 31A. What is 31B? Online money gaming. Correct, no? Online money gaming. Good. 31C. Casinos, chips, coins, tokens. For example, we have 1 lakh and we played, we got 2 lakhs and went out. Will GST apply? Yes. On what value? We played with 1 lakh. We took 70,000 and came out. 30,000 gone. GST will apply on? Sure, no? Full clarity, no? Practical experience? No. Book knowledge. Very good. Okay. That is 31C. 32. 32, we discussed about 5 important notified supplies. What are those 5? Money changing activity, air travel agent, life insurance business, second hand goods, vouchers. Clear with that? Everyone, sir? All of us? Good. That is about rule 32. 33. Pure agent. At least try to recollect. No, try to recollect. 33, pure agent. 34, currency exchange rate. 35 value inclusive of GST. You all wrote your summaries during the classes, right? That's there with you, no? Oh, somewhere it is there. There? Nobody is having? There, no? Good. Come on. Next topic, 100% question will come in examination. What is the topic, sir? Input tax credit, where we discussed from section 16 to 21 and rule 36 to rule 45. 36 was about tax paying document. 37 was about reversal of credit if payment is not made within 180 days. 38 was about banking and financial institution. Take 50%, forget 50%. Rule 39 was about input service distributor. Rule 40 was about claiming ITC in special circumstances. Rule 41 is transfer of credit for amalgamation and merger. 41A was about separate registration in the same state. 42 apportionment in case of inputs and input services. So remember that apportionment? Total ITC minus exempted minus block minus personal. Then we get total. From total, what is taxable you separate. Balance is called common credit. From common credit, we will do the concept called apportionment. Friends, we covered this. Then that is rule 42. Rule 43 was about apportionment in case of capital goods. Rule 44, reversal in special circumstances. Rule 45 was related to job work. So coming to sections. Section 16 was what? Eligibility and conditions to claim input tax credit. Correct? What are the conditions? Recipient must have a tax paying document. Then recipient must receive goods or services or both. Then supplier must pay tax to the government. Supplier must file GSTR 1. Only then credit will come in 2A and 2B. When can we take credit, 2A or 2B? 2B. I clearly told you that monthly we can take credit only when it comes in 2B. When it will come in 2A, when it will come in 2B, sir? If supplier files within the due date, it will come in 2A also. If supplier files after due date, it will come in 2A, but it will come in 2B of next month. So you take credit also next month. They are correct, right? Friends, remember this point. One more last condition. Recipient must file return. And I taught you one very important rule called Rule 37A, where I told you that if supplier filed GSTR 1 but does not file GSTR 3B by 30th September following the end of financial year, then recipient should reverse the credit by 30th November. In your material, you will find one table. In the table last, you will find this point. In the class, I made you write. Because in the class, anyways, we write running notes. Clear, right, everybody? Please reply. Very good. Then, section 17, apportionment of credit and block credit. Block credits, what do we have? Come on. Motor vehicles, where the seating capacity is not more than 13 persons, excluding, sure, including driver. Be careful in the examination. Here, if it is for transportation of goods, can we take credit? Speak out. Very good. Next point. Vessels and aircrafts. Then we had one more point called repairs and maintenance related to that vehicle where credit is not allowed. Then we had some important point like food and beverages, outdoor catering, beauty treatment, health services, including cosmetic and plastic surgery, life insurance, health insurance, membership of club, health and fitness center. But on all this credit is allowed if employer has given that to employee out of a statutory obligation, not as company policy. If it is given as a company policy, then definitely credit is not allowed. Friends, we covered. Everyone, these all points we covered in 17.5 clause B. Come on, 17.5 clause C. Works contract service for construction of an immovable property. But credit is allowed if it is input works contract service to provide output works contract service, or works contract service is taken for construction of plant and machinery. They covered. 17.5 clause D. Goods or services taken for construction of an immovable property. 17.5 clause E. Tax paid under composition scheme. 17.5 clause F. NRTP, very good. He cannot take input on anything except on goods imported by him. 17.5 clause FA. CSR. CSR activity, whatever we spend, we can't take input tax credit. Friends, cover this. This is 17.5 clause FA. 17.5 clause G. Personal consumption. And 17.5 clause H, very important. Goods lost, stolen, destroyed, or disposed of or written off by way of gifts or free samples. This is 17.5 clause H. That discussed. Good. Section 18. Availability of credit in special circumstances. 19, we spoke about job work. That input should come back within 1 year. Capital goods should come back within 3 years. Remember we covered this? Sir? That is 19. What is 20 and 21? 20 is what? Input service distributor. 21. Recovery in case of excess distribution. If excess credit is distributed to a person, that excess will be recovered by the government. And they'll give notice either under section 73 or 74. By the way, what is 73? Tax not paid, short paid, ITC wrongly availed or utilized, or refund claimed erroneously by reason other than fraud, misstatement or suppression. If it is fraud, misstatement, suppression, 74. What is 74A? Both are covered in that, but it's applicable for financial year 24-25 onwards. I made you write this point. Very, very important. Penalty percentages are same, but the difference is that 24-25 onwards, and there it is 30 days, here it is 60 days. And the due date for notice is also different, order is also different. Notice must be given within 42 months, and order to be passed within 1 year. Further extension 6 months. Totally 5 years. Literally able to recall? Sir, as long as you're able to recall, I'm okay. But if your brain is telling you never heard this concept only, then there is a problem. You understand what I'm telling you? No? Sir, my point is very simple. If your brain is slowly trying to recollect the point, at least that feeling is coming. Don't give that sound, okay? At least that feeling is coming that somewhere you heard that, somewhere you have seen this. As long as it's fine. But the brain is telling, oh, then there is a problem. Which category? Sorry? Which one? Category. Sir, clear? Understood the purpose why I am revising? Please reply. Good. Next topic. Zero rated supply and deemed export. A small topic where we have discussed about something called zero rated supplies, where I told you that zero rated supply covers only 2 transactions. Number 1, exports. Number 2, supplies to SEZ. And there we have two options to take refund. One, without payment of tax. Second, with payment of tax. With payment of tax, you go when you have credit on capital goods. If you have no credit on capital goods, go for without payment of tax, where you have to file something called letter of undertaking, LUT. Remember this? And to take refund, there is a formula. What is the formula? Net ITC into turnover of zero rated supply divided by adjusted total turnover. And net ITC is only ITC or inputs and input services. But in case of inverted duty structure, inverted duty structure means what? Rate of tax on inputs is higher than rate of tax on output. Therefore, refund, there is a formula again, Rule 89(5), wherein the formula is net ITC into turnover of inverted rated supply divided by adjusted total turnover minus tax payable on inverted rated supply into net ITC divided by ITC on inputs and input services. And there net ITC covers only ITC on inputs. Sir? Clear, sir? Now, some reality fact I will tell, because some students are looking at me in a different way. It's some expressions, okay? Some reality I'll tell. Sir, one point is very clear. As a student, I was also studying multiple subjects, okay? After becoming a faculty, my focus is on 1-2 subjects where I'm teaching, but not on all, okay? But as a student, since you are in that student phase, you are studying multiple subjects. Now some students are putting sad faces when I'm telling, sir is getting answer, I'm not getting. Obviously I will get, because daily my job is only this. But your brain already loaded with lot of SFM, lot of cost audit, lot of CFR, lot of SCM, SPM, whatnot. So many things are loaded in the brain. So it takes some time for the answer to come. There's nothing wrong. That's what I told you. As long as you're able to connect with the subject, that is okay with me. Connection is lost, that is a problem. That is the whole problem. Where your brain is only telling, oh, is this there? Then that is a problem. If you are able to recollect, yes, this is there, we learned that, we'll revise. Okay, then fine. Then that is very good. I don't expect an answer to come instantly, because I know since past few months your brain loaded with a lot of other subjects. How will the answer come instantly? Still you are trying your best and telling the answer, good, very good. Don't feel anything about it. Clear, right? But you will only realize by yourself which area you are lacking. That area you have to practice and focus. That's your duty. Whatever time you have, utilize effectively and get it done. Clear? And my reason why I am revising is because I told you, one, to make you recall. Second, a few amendments which I have to tell you, I can comfortably teach that. Correct? No, because if I tell amendment, you will tell, then there is a problem, no sir, for me also. That's why I'm spending some time. Got it? I can just spend half an hour and complete the amendments and go. Honestly speaking, there are not so many amendments as such. You are very small, but it looks like big, but actually very small. But I want to spend some time so that we'll recall the content once and then proceed. Clear? Next. Deemed exports. Deemed exports we covered in section 147. Oh, good. Answer also came. We discussed about something called supply of goods against advance authorization, supply of goods to a EPCG holder, then supply to a export oriented undertaking, then gold. Wow, man, wow, good. See, answers are coming. Not that they'll not come. Some students are telling, sir, for them you taught separately, sir. What did I teach separately, sir? Same thing only I taught to everyone. Who is giving answer, I taught same thing. Who is not giving answer, also I taught same thing. Simple. Now they will tell extra thing. Sir, they have big brain, sir. What big brain? You also have cerebrum, cerebellum, medulla. They also have the same thing. No extra thing is not there in brain. Simple. It is just that we have to keep activating our brain and tell the brain, come on, revise, recall, then summarize. Then brain will definitely remember. Sir, no, I'm telling this statement because some will tell so loosely and lightly, they will tell, their brain is big, my brain is small. And what is this word called brain is small nonsense? God will not fix some extraordinary brain and send it. It will be there. 1-2% will be there. I also tell, 1-2% will be there like that who are extraordinary brains. How will they get? Means God gift. That is only 1-2%. Don't tell half of. Half of will not ever be there. 98% are common only. All of us are same. 1-2% will be there. They are only called prodigy, child prodigy. They can do anything in wonders, they'll do. They are different people. Okay, sir? Next. TDS, TCS under GST. 51 and? Excellent. 51, TDS will come only when it is supplied to Department of Government or PSU or society established by government, metal scrap by unregistered person to a registered person. Correct, no? And TDS will apply only when the contract value is more than, very good, 2,50,000. And one special point I taught you there, that TDS will not apply if the location of supplier and the place of supply both are in one state, but the location of recipient is in another state. Remember that? Good. TCS only when supply is made through e-commerce operator and payment also made through. That is important. If it is OLX example, OLX, it is through e-commerce, but payment is not through e-commerce, then TCS will not apply. Now I have a question. Shiva TEJA opened Swiggy app. I placed order for one biryani from Paradise Biryani. Okay, my dear friends, I'll make payment to Swiggy. Swiggy will make payment to, speak out, Paradise. Tell me guys, will TCS apply? Don't dare to tell yes. 100% answer is no. Because Swiggy is only liable to pay GST because they are covered in section 9(5). If a transaction is covered in section 9(5), TCS will not apply. They discussed. The replies, speak out, my dear friends. Are we all clear, sir? Next point. E-way bill. Come on, friends. When will e-way bill come? Only when the movement of goods of value more than 50,000. So let us say it is 48,000 plus 18% GST. How much total? 56. 56,640. 56,640. But it is 48,000 plus GST. Now tell me, is e-way bill required? Yes, sir. Very good. Answer is yes. Because to decide 50,000, we look at something called consignment value. And consignment value is always including GST, but excluding exempt supply. And there are some cases where way-bill is mandatory even though it is not more than 50,000. 2 points I taught you there. Handicraft goods, very good. Second, job work. And way-bill is not required in case of jewelry, but it is required in case of imitation jewelry. Remember? Next point. How long that e-way bill is valid, sir? Sorry? Up to 200 kilometers 1 day. And for every 200 or part thereof, 1 additional day. And in case of over-dimensional cargo or multi-modal shipment involving at least 1 leg by ship. What is the answer? Up to 20 kilometers 1 day, and for every 20 or part thereof, 1 additional day. And how do we calculate that 1 day, sir? If it is, let us say, it is generated in the evening at 5:30 and it is 1 day. How long it is valid? Next day 5:29. Next day midnight. What if it is today afternoon? Same. Today morning? Today night? Same? Sure? Good. Exam question may come. Be careful. Okay, guys. Good. Next topic. GST refunds, where we spoke about inverted structure, and also about zero rated supply. Probability that question may come on working as well. Please be careful. Next, returns, where we spoke about GSTR 1, GSTR 3B, GSTR 4 is for whom? Composition. What is the due date? Huh? 30th June, fall in the end of financial year. It is to be filed on annual basis. Correct, no? How do composition pay tax? Quarterly basis. Good. Which form? CMP 08. Very good, very good. Some are answering very well. Next, annual return, GSTR 9, 9C. GSTR 9 is required for whom? 9 is mandatory for those whose turnover is more than 2 crores. 9C, more than 5 crores. 9 is annual return. 9C is a reconciliation statement between the books of accounts and books of accounts means ITR, income tax, and GSTR 9. Sir, during your lectures I have shown you the form as well. Final return, which form? GSTR 10. Who will file GSTR 10, sir? Those whose registration is cancelled. And the time limit to file GSTR 10 is 3 months from the date of cancellation or 3 months from the date of order of cancellation, whichever is later. Generally, everywhere you will find earlier, but that is the only one section where you have the word called later. There it is not earlier. It is 3 months from date of cancellation or 3 months from date of order of cancellation, whichever is later. Are we all clear with it? Next point. Penal provisions, late fees is there. Accounts and records, what all records you have to maintain. Annual return we just covered. This topic is no more relevant. Dispute resolution demands. Come on friends, here important section is 73, 74, 74A. And we have got one more important section called 79, recovery proceedings. 80, payment of tax in installments. Commissioner may grant maximum 24 monthly installments. And this facility is not allowed if the amount is not more than 25,000. We discuss this, sir. Next, assessment and appeals. Appeal assessment, we covered something called 59 to 66. Which sections we covered, sir? 59 was related to self-assessment, 60 related to provisional assessment. Correct, no? And provisional assessment, some important point I taught you. First, when you apply, they will pass provisional order within 90 days. After that, they will pass final order within 6 months. Correct? 6 months. Further extended for 6 months by additional or joint commissioner. Further extended for 4 years by commissioner. Totally 5 years. And after final order is passed, if final payment is more than provisional payment, balance you have to pay along with interest at the rate of 18% per annum. But if provisionally you paid 1 lakh, but finally is only 80,000, then you have to apply for refund, which they give within 60 days. If they don't give within 60 days, interest will start from 61st day. Very good. So same comparison in customs it is 3 months. After 3 months interest will start. But for refund, here also 6%, customs also 6%. But for payment to the government, it is 18% in GST, 15% in customs. They are able to recall? Enjoying the revision? Pakka? Fair enough. Thank you. Next. Appeals, where we covered some important point like appellate, first is appellate authority, then appellate tribunal, then High Court, then Supreme Court. and tribunal there is national bench, state bench. State bench will go when there is no place of supply. If it is place of supply, we will go to national bench or regional bench. From national bench, we will directly go to Supreme Court. State bench area bench will go to High Court. Remember this? What is the pre-deposit we have to pay if we want to go to appeal before appellate tribunal? %, of admitted dues plus 10% of %, of admitted dues plus 10% of remaining tax in dispute, subject to maximum of 20 crores under CGST. Is that covered? Good. Advance ruling. One small topic where we covered about something called, we can go to advance ruling for any topic except a question called place of supply. The reason being very clear that advance ruling authority is a state level authority. We can't go to a state level authority and ask a question on place of supply. Friends, correct, sir? Did we discuss this point, everybody? Next. Offenses and penalties. Very important topic. Definitely expect a question in the examination. Where we covered section 122 for different penalties, where the penalty is 10,000 or tax, whichever is higher. We spoke about something called 129 section, very important section. Owner comes forward, owner does not come forward. Owner come forward, it is 200% of tax. Owner does not come forward, 50% of value. That discuss, sir. 130, confiscation, and the maximum fine is market value of the goods minus tax. And one more important section called 132, arrest. Arrest, where we covered about something called, if it is covered in 132 1 A, B, C, D, first 4 points, issued invoice without supply. First point, supplied without invoice. Second, issued invoice without supply. Third, claimed ITC based on that. Fourth, collected but not paid to government within 3 months from due date. In these first 4 cases, if the tax severity is more than 5 crores, it is called cognizable and non-bailable. In all other cases, it is non-cognizable and bailable. If it is cognizable, means a person can be arrested even without an arrest warrant. So we discuss that. Very important section, sir. Please be careful. Next. Inspection, search, seizure, arrest and prosecution. Next topic, anti-profiteering. We know that. Good, sir. Come on. So, what is there in customs now? Customs, number 1 topic, valuation. Undoubtedly, you know, very clear, very important topic, where we spoke about FOB, CIF, and during classes we solved so many questions. So many questions. We saw at least some 20 plus questions I solved in the classroom, where we covered all the possible angles. Air freight, imported by air, where we take 20% of FOB maximum, and insurance not available 1.125%. And I told you very clearly that whatever adjustments to be done before FOB stage only, except for insurance and freight, we'll do after FOB. And freight covers cost of transport, loading, unloading and handling charges, where we covered something called Rule 3, transaction value. Rule 4, identical goods. Rule 5, similar goods. Rule 6, 3 to 5 not possible, go to 7 or then go to 8, or you can reverse. Rule 7, deductive value. Correct, no? Rule 8, computed value. Rule 9, residual method. Rule 10 is adjustments to transaction value. Rule 11, declaration by importer. Rule 12, rejection by proper officer. We covered all this. If they don't want to ask question on normal valuation, they will ask question on identical goods. And we all know the concept that if more than one price is there for identical goods, we will take whichever is least. But I told you one important principle, always keep in mind. In order to compare, they must be substantially same quantity, commercially same level. Remember that, sir? Good. Then baggage, something important. Indian resident, foreigner residing in India, tourist of Indian origin, 50,000. And if it is coming from Nepal, Bhutan, Myanmar, 15,000. And for infant means not baby. We know that, no? Infant means a child who is not more than 2 years. And for that infant, what is the exemption? Only used personal effects. And for a person aged 18 years and above, one laptop can be brought duty free. And one more special point, Rule 5, jewelry allowance for those who stayed abroad for more than 1 year. For gentlemen, 20 grams, value cap 50,000. For lady passenger, 40 grams, value cap 1 lakh. Recently, just few days back, Government of India has revised the baggage rules and they have doubled the limits. 50,000 limit, they made it as 1 lakh. And for that jewelry exemption, 50,000 they made 1 lakh, 1 lakh they made 2 lakhs. But they are not applicable for examination. If you type online, you will find somewhere 2 lakhs. You should not come back and tell me, sir, we are writing in June 26, we are passing in June 26. And we are not bothered about December 26. Agreed? Speak out. By July or August, when the results are out, we are no more a student, we are a professional. August? Date also announced. August 5th result date. So August 5th, majority of them here will definitely become professionals. How many of you will become? Please raise your hands. Good. Some friends are asking their friend, "Arey, you will become CMA or not?" You ask your friend only, sir. What is that, sir? You should have confidence on yourself. What, man? Just like that? You raised hand? Oh, you raised 2 hands. What is the meaning of 2 hands? 2 attempts. Array, no, sir. It's not 2 attempts, it is 2 groups. Okay. Next. Okay, come back. Don't deviate. Next. Manufacturing in warehouse, where we discuss an important point in manufacturing, where I told you something called in warehouse, you can do manufacturing activity also. And in case of, there are 3 types of warehouse called public, private and special. Special is only for precious metals. And in private warehouse, manufacturing is allowed. And in case of EOU, EHTP or STP, there is no time limit. In any other case, it is only 1 year. Even though they gave 1 year time, after 90 days, interest will start at 15% per annum. Something. Duty drawback. We cover a lot of questions here. 74, 75, 76. 74, imported goods, same goods are exported. Without use, 98% drawback is allowed. After use, 95, 85, 75, 70, 65, 60. Not more than 3 months. 3 to 6, 6 to 9, 9 to 12, 12 to 15, 15 to 18. Not more than 18. And there we covered something called drawback is not allowed if they are exported after use in case of 4 products. Tea chest. Next one. Wearing apparel. Next. Exposed cinematograph films. Unexposed photographic films, paper and plates, and X-ray films. Remember paper plate, one example? Paper plate. So we discuss that. Clear with this? 75 is imported goods are used in manufacture of finished goods, then finished goods are exported. There, what was the story we discussed? There is no percentage of drawback given in the law. Either you can go for all industry rate or you can ask for a special brand rate. If all industry rate does not cover 80% of duties paid, we can apply for special brand rates. And there one important point I taught you there was maximum drawback is only 1/3 of market price. Drawback is not allowed if it is not more than 50 rupees, and drawback is allowed only if it is more than 1% of FOB or more than 500. These are all questions. Clear, sir? Next, customs, import of goods, concessional rate. Then remission of duty. Here only we covered the concept called waiver in case where goods are derelict, jetsam, floatsam. Goods are abandoned by the importer. There. Goods are lost or destroyed. Relinquishment of title. Refund in case where you paid import duty but you paid excess, you can apply for refund. But in refunds, always keep in mind one important principle called unjust enrichment. A person cannot enrich at the cost of other person. Cover that, sir? These all 3 points are related to FTP, which stands for Foreign Trade Policy. There we covered schemes like MEIS. We spoke about a scheme called Advance Authorization, Duty-Free Import Authorization. One table also we have in the material. We covered about something called RODTEP, Remission of Duties and Taxes on Export Products. I know you might find it little different with respect to foreign trade policy, but it's important that you study at least before the examination. Now generally, institute pattern is very clear generally that they ask 30 marks MCQ and 14 marks 5 questions. Actually you get 7, but you have tried only 5, which comes to 70 marks. Total 100 marks. But there is also a possibility where some situation may come like this. This is very clearly. Where they will give 25 marks MCQ and 15 marks, they will give 7 questions and you have to answer any 5. And in that there is a possibility where they will tell first and last question mandatory. You understand the situation here? You understand what I am trying to tell? 25 marks MCQ, sir. Descriptive will be from 2 to 8. 1 will be MCQ, boss, which is what? 25 marks. And they'll clearly tell 2 and 8 mandatory. And from 3, 4, 5, 6, 7, you write any 3. 15 marks each. 15 5 is 75. 75 plus 25, 100. If they give like this, don't tell you should give 30 MCQ, why you give 25. You cannot question that. Simple. Clear, no friends? Generally, I have a news that they are trying to do like this. The reason being very clear that some students are trying to learn GST very well and ignoring customs. And when a question is coming in exam from customs, out of 7 they should write anyways only 5, no. They are trying to ignore this. The institute has a smart strategy. And that too, in 15 marks, they have their complete liberty. It could be 555, 8 plus 7, 645, 735, 7323. They have got complete liberty with them. Ultimately, to come for your syllabus only. What happened? You can look at your model test papers. You'll understand. Okay, sir? Sir, some are only thinking about why they are telling 2 and 8 mandatory, sir. They can give choice for that also. Why do you want to think like that? Everything in life cannot be based on choice. Come on, yaar. Don't expect choice in everything, my dear friends. It's important that some questions will always be mandatory. You have to write them. And important key areas they'll cover. Sir, the reason is what I'll tell you. Generally what happens is, this 2 question mandatory, what they'll tell, no? they'll try to cover some topic related to input tax credit or some topic related to value of supply. If a student is living that topic like ITC or value supply in choice, that's ridiculous. I mean, sorry for that word, but it's true actually. Because being a professional who's at the last level of the professional examination and course like CA or CMA, you cannot tend to ignore these important topics. And institute wants to squeeze that. They're waiting for an opportunity. Got it, no friends? So let's prove them wrong and get good marks, whatever way they ask. I'm not trying to tell this will only happen. This also can happen. Old strategy. Anything happens, we should be ready for it. Don't have any surprise in the exam. That's why I told this. Clear, friends? Everyone, sir? Thank you so much for all the time what you have given in revising and recalling the points. Now I would like to spend a little bit time on discussion about the important amendments which have come up for June 26 examination released by our institute through a supplementary study paper summarized and condensed in the material what I have given. Let's go through that, discuss the points and complete it. Let's not finish it, let's complete. Clear? Thank you so very much. I strongly believe and hope that this revision was helpful. Yes, sir. Yeah. Come on, get back, guys. Statutory updates for June 26 examination. Come on, get back. First, supply topic. Scope of supply. There is one small interesting amendment related to what is the meaning of the word called local authority. The general meaning, what is local authority, sir? In simple terms, in city, we call it as a municipality, and in villages, we call it as panchayat. That's the meaning. You see what is the amendment? Local authority means a panchayat or a municipality or a municipal committee or jilla parishad or a district board or any other authority legally entitled to or entrusted by the government or any state government, underline this word, with the control or management of a municipal fund. With control or management of municipal fund or a local fund. What is local fund? Local fund means any fund under the control or management of an authority of a local self-government established for discharging civic functions in relation to panchayat area and vested by the law. With the powers to levy, collect and appropriate any tax, duty, toll, cess or fee by whatever name called. Municipal fund, same thing you will find, but the only difference you will find is here it is panchayat, here you will find the word metropolitan area or municipal area. So in a place like Hyderabad, in a city, we call it as a municipal fund. In rural areas, villages, we call it as local fund, panchayat fund. Simple. Got it, sir? So please reply. Not a great point as such. Next point, important amendment. Sir, come on. What is Schedule 3, sir? Neither regarded as supply of goods nor regarded as supply of services. There, we discussed some points I'll recall. Every point I'll recall once. Okay? First point, services by employee to employer in the course of employment. Services by court or tribunal. Services by MPs or MLAs, sale of land and building, except construction services, funeral, burial, crematorium, mortuary, including transportation of deceased. Then we had actionable claims other than specified actionable claims. Very good. Then we covered 3 points related to import. One was about out and outs. Second, supply of warehoused goods before clearance for home consumption. Then we also had a point called high sea sales. Covered all this? Then 2 important amendments already I taught you. What are those 2? Services of co-insurance. In case of co-insurance, if the lead insurer is paying GST, the other person will not pay the GST. Then in case of reinsurance, if the GST is paid on the gross premium without deducting commission, then the reinsurer need not pay GST on the commission. We covered this point. Everyone, sir? Now, coming back to the customs related point. What was that? Out and out supplies, high sea sales, supply of warehoused goods before clearance for home consumption. Now a new point they added. Please see what is that. This was the point what we know. Supply of warehouse goods before clearance for home consumption. We know this point already, sir. Sir, this is the new point added. What is that new point? Supply of goods warehoused in a SEZ. Supply of goods warehoused in a SEZ or a free trade warehousing zone to any person before clearance for what? Exports or to domestic tariff area. So in simple terms, earlier what was the point covered was supply of warehoused goods before clearance for home consumption. Now one more point what they added is supply of goods which are warehoused in a special economic zone. Warehoused in what? Special economic zone or free trade warehousing zone to any person before export or before clearance. Domestic tariff area means within India. We know that already. The reply. Come on, what is the amendment? Come on, repeat. It's not amendment, a new point added. Come on, what is that new point? Supply of goods which are warehoused in a special economic zone or free trade warehousing zone to any person before clearance for export or clearance in domestic tariff area. Clear, no friends? In exam, a question may come on multiple choice. Possible. But this amendment has come with effect from 1/10/2025. And one interesting clarification they have given, telling that those who already paid before 1/10/2025, you will not get any refund. What is gone is gone. Understood? Read that line. No refund shall be made of all such taxes which have been collected but which would not have been so collected. Understood, sir? Please speak out. So what is the new point which is added, my dear friends? In schedule 3, sir. Supply of goods warehoused in a special economic zone or free trade warehousing zone before clearance. Before clearance. Clearance can be for export or clearance can be to a domestic tariff area. Clear, sir? The only point is, earlier what was covered was goods which are warehoused in customs. But here what is covered is goods warehoused in SEZ and also goods warehoused in free trade warehousing zones. Sir, Government of India has notified some areas like free trade warehousing zones in different cities, and they are giving places to the companies to put up their warehouse. Like example, in Hyderabad, near Shamshabad airport, there are huge warehouses given for various multinational companies. And that area is technically called as a free trade warehousing zone. Understood, sir? In lot of metropolitan cities in India, it is there. Clear? Come on, one more time please, last time. What is the amendment added? Supply of goods which are warehoused in a special economic zone or free trade warehousing zone before clearance, either for export or, that's it. Clear, sir? Speak out. Next point. Exemptions. Exemptions topic, friends. First point very clear, already I told you that. Services of what business? Life insurance business. Provided by an insurer to the insured, where the insured is not a, what, sir? Group. If it is group insurance, it is taxable. If people like you and me separately take insurance, it is exempt. I taught you this already, sir, before as well. So speak out. On life insurance, there is no GST as such. And for the purpose of serial number 36C and D, group means what? Group of persons who join together with a commonality of purpose or for engaging in a common economic activity other than availing what? Insurance. And includes what groups, sir? Number 1, employer-employee groups, where employer-employee relationship exists between master or group policy holder and the members of the group. Non-employer-employee groups, where a clear evident relationship exists between the master or the group policy holder and the members of the group for services or activities other than what? Insurance. So for removal of doubts, it is clarified that exemption shall apply to a contract of insurance where the insured is what? Individual, or an individual and the family of the individual, and the family shall include all individuals insured as a family in the contract of what? Insurance. I hope you are clear with this. So if it is insurance for you, exempt. Insurance for you and your family, it is exempt. But if it is group insurance, same story, without any change, only one word difference: health insurance. Rest all you will find everything is same. So what is the point now? One line answer. Service of life insurance and health insurance to individual or to individual along with his family is what? Exempt. But it is taxable if it is given to a group. If it's a group insurance, like company is taking for all the employees, taxable. Understood, no sir? I hope we are clear, my dear friends. Please reply. So, in this whole page, there is only one point. What is that one point? Life insurance, health insurance is exempt, but it is taxable if it is given to a group. And I don't think I need to teach you what is health insurance. You are finance students. You know what is health insurance. Next one, reinsurance. Sir, the way insurance is exempt, exemption is also given for reinsurance. So what is this point meaning? Reinsurance of life insurance is exempt. Reinsurance of health insurance is exempt. Life insurance to group is taxable. Health insurance to group is taxable. Reinsurance of life insurance to group is taxable. Reinsurance of health insurance to group is taxable. If that is taxable, reinsurance also taxable. If that is exempt, reinsurance also exempt. Simple? Everyone? Probability is there. In exam question will come. How question will come? Where they will ask you which of the following is exempt. They'll give 4 or 5 points. In that 4 or 5 points, they might cover this point also, along with other points what we already covered. Clear, no friends? Everyone, sir? Next line. Time of supply. Section 12.4 is completely omitted, boss. What is 12.4? Vouchers. Vouchers, what was the concept? If supply is identifiable, we learnt that time of supply will be date of issue of voucher. If supply is not identifiable, time of supply is date of redemption of voucher. That section is gone. If that section is gone, then what is the answer? Vouchers will now fall under, which is nothing but 12.2 or 13.2. I am sure we are clear. So please reply. Next point I just taught you already. That is, in case of lottery, it was 100 by 128, which now became 100 by 140. Why did it change? Why valuation rule changed? Because GST rate 28% became. That's why it's automatically changed. Simple answer. Chalo, hold on. Before we proceed, come on, what are the points we covered till now? Schedule 3, one new point added. What is that new point? Supply of goods which are warehoused in special economic zone or free trade warehousing zone before clearance. Clearance for export or for domestic tariff area. Next point. Life insurance, health insurance is exempt, but it is taxable if it is given to a group. If it is exempt, reinsurance also is exempt. Next point, vouchers, 12.4, 13.4 gone. It will come under general rules. Next point, lottery, 28% became 40%. So obviously value of supply will become 100 by 140 of the face value of ticket, or 100 by 140 of price notified in official gazette, whichever is higher. So fully clear, sir? Sir, the logic is simple. This time whatever I am spending with you, if it is adding 3, 4 marks, 5 marks more to you, what more I want? That is more than enough for me. Simple answer. Clear, sir? Next. Treatment of secondary or post-sale discount. Let me explain that to you very clearly, sir. Listen. Don't read all that first. Listen very clearly, sir. Sir, let us say, for example, there is a supplier. There is a recipient. Supplier is supplying the goods at a value of, let us say, 10,000 and is giving a discount. He is giving 1,000 rupees discount and net amount is 9,000. Tell me guys, GST will apply on what? GST will apply only on 9,000 because we know the concept called, there is something called 15.3 section. In that there is 15.3A, 15.3B. Remember these points? What is 15.3A? Discount recorded in the invoice. 15.3A is what? Discount recorded in the invoice. 15.3B, very important point, post supply discount. Correct? No, sir? Now what they have clarified is that this post supply discount, when it is given by supplier to the recipient, okay, what will happen? Supplier will reduces output tax. Yes or no, sir? Reduces value means reduces output tax. If supplier has to reduce his output tax, if supplier output tax is reduced, recipient should speak out, sir. Reverse the credit. If supplier output tax comes down, recipient credit also should come down. Now tell me, supplier will reduce his output tax by giving what document? Credit note. Perfect. Credit note is a document given by supplier to recipient in order to reduce the tax. Correct? No, sir? Here, I'll tell you one important point. There are two types of credit notes. One is called GST credit note. Other one is called commercial credit note. GST credit note reduces the output tax of customer. If output tax of customer is coming down, recipient should reverse the credits. Sometimes supplier will not give a GST credit note, he will give a non-GST credit note. That is called commercial credit note. In that case, recipient need not reverse the credits. I will give a small example here so that complete clarity will come. Okay, listen carefully, sir. Sir, let us say there is Shiva Teja, another person called Ravi Teja. Shiva Teja supplied goods to Ravi Teja for 1 lakh plus 18% GST, total 1,18,000. Without any discount I gave. And in invoice I wrote payment to be made within 30 days. Okay, sir? Within 1 day, that person called me and told, sir, I will make payment today itself. I'll make payment today itself. But please offer some discount. I told him, do one thing. Don't pay 1,18,000. Pay only 1,16,000. I gave him 2,000 discount. Why? Because he made payment early. Correct? No, sir. But I am giving him not a GST credit note, but I am giving him a financial credit note. You might ask, sir, why are you giving a financial or commercial credit note? The reason because in the books account should settle, no, sir. Sir, my straight question to you. in my books, what is the sale I have shown? 1 lakh, 18% GST. Total 1,18,000. So my debtors, speak out. My debtors is 1,18,000, but customer is paying me only 1,16,000. What is the balance to the one still receivable? No, adjusted. But I should pass some entry in the books. What entry I'll pass? I'll pass a credit note entry. If I'm giving a GST credit note, I'll reduce my output tax. And that fellow should reduce his input tax credit. But if I'm giving him financial credit note or a commercial credit note, what will happen? I will not give any GST credit note. I will not reduce my output tax. If I am not reducing my output tax, that fellow need not reduce. Complete clarity, sir? Speak out, sir. Everyone, sir. Now you might ask, sir, practically I want to understand why you will give financial credit note, why not GST credit note? That doubt can come to your brain. Sir, yes or no, sir? I'll tell one situation. That is, listen carefully, sir. Okay? Listen very clearly. Okay, sir? Listen. Shiva TEJA is a medicines dealer. Medicines wholesaler. And you are a medicines retailer. I supplied goods to you in the month of August 2025. When did I supply goods to you? August 2025. I made the sale also. You made payment also. I paid GST also. You took credit also. All this happened in August 2025 only. Sir, listen. August 2025 only. All this happened. Okay, sir? Stock is there with you, but you are not able to sell the stock. Customer is coming, nobody is buying. In that medical shop, that product is lying just like that. Nobody is buying. You are waiting. 158 it will sell, 158 it will sell, it will sell. You are waiting. After 1.5 year, August 25 I sold, after 1.5 year, the goods have expired. Medicines have expired. Will you bear the loss? Speak out. Generally what happens is, retailer will return the stock to wholesaler. Wholesaler will return to manufacturer. And manufacturer will destroy that. You understood, sir? Now tell me, when you returned that medicines to me, which are expired, understand what I'm talking? Expired medicines. Can I give you a GST credit note? Answer is no. The reason because that credit note to report the credit note, the time limit is only 30th November following the end of financial year. Already the time limit to report credit note is over. I understand what I'm talking. Already that time limit to report credit note is over. So I cannot give you GST credit note. What will I give? Commercial credit note. When I'm giving commercial credit note, will I reduce my output tax? Speak out. When I'm not reducing my output tax, you need not reduce your input tax credit. That is the concept. Understood? Full clarity, everybody? Please speak out. Everyone, sir. Now read it. Now full clarity will come. First point. Whether full ITC is available to recipient when the recipient make, what, sir? Discounted payment to supplier on account of what credit note, sir? Financial or commercial credit note. So speak out. Sir, directly read the third point. It is clarified that recipient will not be required to reverse the ITC attributed to the discount on the basis of financial or commercial credit note issued by supplier, as there is no reduction in the original transaction value of the supply, and accordingly corresponding tax liability would also not get reduced. So if supplier is reducing output tax, then only recipient will reverse the credit. And if supplier is giving a financial or commercial credit note, supplier is not reducing output tax. When supplier is not reducing output tax, recipient need not reverse the credit. Complete clarity, sir. Next line. Whether post-sale discount offered by whom, sir? Manufacturer to dealer would be treated as consideration paid by manufacturer for the dealer supply to the end customer as a monetary value. Is it a consideration? The answer is very simple, sir. Generally, agreements will be there. Generally, agreements will be there telling that if stock is not sold between so and so time, I'll give you extra discount. In that case, supplier will give a GST credit note. If supplier is giving GST credit note, he is reducing output tax. If his output tax is reduced, recipient ITs also should be reduced. Friends, yes or no, sir? So please reply. See the line. In cases where, see the third point. In cases where manufacturer has some, what, sir? Agreement with a what, sir? End customer to supply goods at discounted rate. Manufacturer may issue commercial or financial credit note to the dealer, enabling dealer to provide goods at agreed discounted rate. Therefore, it is clarified that post-sale discount given by manufacturer to dealer for supplying to end customer at discount rate should be included in the overall consideration, as it is an inducement towards the supply of goods by dealer to the end customer. Ultimately, we are trying to ensure that sales will happen. Correct, no, friends? The bottom line, what you have to keep in mind is that if supplier is giving, one answer I should give, sir. If supplier is giving financial or commercial credit note, supplier output tax will not come down. Automatically, recipient should not reverse the credit. That is the bottom line of the whole story. Are we clear? Next point. Whether a post-sale discount given by manufacturer to the dealer can be treated as consideration in lieu of activities performed to promote the sale of goods. Sometimes what will happen, shopkeeper is trying to do some promotional activity. Because he is doing that promotions, manufacturer is giving some discount to him. Clear? Now see the story. GST would be leviable in cases where dealer undertakes what activity, sir? Promotional activity, such as advertising campaigns, branding activity, customization, sales drive, exhibition arrangement, or customer support service. Only when such services are explicitly stated in the agreement with a clearly defined consideration payable for such supply. In such cases, dealer is giving a separate service to the supplier and accordingly GST would be chargeable. The simple logic, sir, that dealer is doing some promotional activity. For the promotional activity, company should pay him some money. Instead of paying money, they are giving discount. Sir, whether discount is given or money is given, it is for one and the same only, no? Sir, I told my client, sir, please increase my fees. My client is telling, sir, I can't increase my fees, increase your fees, but do one thing, I have got one bike showroom, you buy one bike, other people I give 50,000 discount, for you I will give 80,000 discount. Indirectly consideration came or not? Next one, input tax credit, guys, come on. ITC. First point, rail transport, sir. Transport of goods in a container by rail, not Indian Railways. We are talking about private operators for operating containers. The rate of GST is 2.5%. If you charge, you can't take ITC. If you go for 18%, you can take ITC. Simple terms, 5% without credit, 18% with credit. Sir, GTA also changed, sir. GTA during classes I told you that 5% without credit or 12% with credit. That 12 became 18. There is no 12 rate in the market now. In the market, I mean, practical world, there is no rate called 12. It is only 5 and 18. And we have 40. 28 also gone. Clear? Next. Multi-modal transport. This is interesting, sir. See the example, no? A good example given. A engages B. Multi-modal transporter. Multi-modal means, sir, some distance by vehicle, some distance by rail, some distance by ship, like that. Multiple modes of transport are used. From New Delhi to Gaya for 1,200 and charges 5% GST, wherein B uses more than one mode of transport for movement of goods. B, for supplying the service, he hires a GTA who charges what, sir? 9%. That means what? 18%. B also hires D, a container operator, for 400 who charges 5%. The concept is simple. B shall be entitled to take ITC on the above mentioned input services as under number 1, only to the extent of 15 rupees. What is 15 rupees? 2.5% of 600. Where is the 600? C. And not, how much, sir? 54 for input service of GTA. And to the extent of, what, sir? To the extent of 10 rupees, 2.5% of 400 for the input service of container transport operators. So the concept is simple here. Please see the line very clearly there. We are talking about multi-modal transport, wherein multiple transportation is involved. Clear, no friends? You see the example very clearly. A is engaging B for transport of goods from New Delhi to Gaya for 1,200. A is engaging what, sir? B. And how much they charged? 2.5%? 2.5%. Sir. And B uses more than one mode of transport for movement of goods. So for B, there is some input service taken. Sir. What is the input service B has taken? B has taken service from GTA, who charges what, sir? 9% GST. And B also hires D for 400, who charges 2.5%. What law is telling here? B shall be entitled to take ITC on the above mentioned input service as under, only to the extent of 2.5% of 600, which is 15, but not 54. And next line, to the extent of 10, which is 2.5% of 400 for the input service of container transport operator. Are we getting clarity? If you observe carefully, the answer is what you know. If you want one line, I'll tell one line also. That one line is for GTA, how much GTA charged? 9%. Even though they charge 9%, you cannot take 9% input. You can take only, because output, how much you are paying? 2.5. Sir, for B, this is the output. This and this are input. Output, what rate you are paying? 2.5, 2.5. Input also you take only 2.5% credit, but not full. Understood? Output what rate? 2.5%. Input, we have 9. We also have 2.5. Correct, no friends? For 2.5, you take 2.5. For 9 also you take 2.5. Sir, done, clear? Sorry? So are we clear with this part, everyone? Please reply. Can I proceed? Seriously? We'll complete, sir. Next point you see. Sir, 17.5, clause 17.5 is what? Block credits. Sir, in block credit we discussed one point called works contract service for construction of immovable property. But credit is allowed if it is plant and machinery. One small amendment they have done is that plant and machinery word, they changed it to plant or machinery. Clear now, friends? So just a second. Sir, you have to understand one point here. Earlier the word used was plant or machinery, and that plant or machinery has been changed to plant and machinery, because plant or machinery means either it can be plant or it can be machine. Then they started telling, I will take for this, I will not take for that. Then they clarified, boss, it is not plant or machinery. In India people are very talented. One word they interpret differently, and they told it is no more plant or machinery, it is plant and machinery. You write one line simple way here. The words plant or machinery, the words plant or machinery, the words plant or machinery has been changed to plant and machinery. Sir, clear with this part, everybody? Oh, here, please see this point here. If it is building construction, what will happen, sir? Credit is not allowed. Capital repairs, not allowed. Revenue repairs, definitely it is allowed, because we know that construction means repairs, renovation, alteration to the extent of capitalization. I taught you in the class that if it is capital repairs, then credit is not allowed. Revenue repairs, credit is allowed. Plant and machinery, credit is what? Allowed. The reason, because it is no more plant or machinery, it is plant and machinery. Clear, friends, everyone? So please reply. Sir, are we clear with all these points, all of us? Yes, come on, friends. So we are done with amendments with regard to input tax credit topic. Few more points are there. Let's spend some time and complete it. Next is related to registration under GST law. Two small point, friends. So normally registration, earlier, once upon a time when you apply for registration, they told in the law that they will generally grant within 7 working days. Then they told they will do it in 3 working days. But practically they used to take a lot of time to get the registration done. And department, what used to happen is that people used to make application, queries used to come, they used to ask multiple documents. Sometimes it used to take 10 days, 15 days to get GST registration. But they brought one interesting concept recently. I also used this practically multiple times. A good facility has come where they told if the tax liability is not more than 2,50,000. 2,50,000 is not value, sir. It is tax. If a tax liability in the month, if tax liability in a month is not more than 2,50,000, you can select that option. that is called 14A. They brought some concept. You can select that option. They are granted registration within 1 day. And lot of my clients, I got within 2-3 hours only. Same day we got registration. And client felt very happy. He called and told, sir, same day we got. Then I told, sir, we had lot of contacts, so we discussed with them. We got in same day. Reality, you know, I know. Obviously no, sir. When there's opportunity, why will you leave, sir? Come on, see that. So if any person who has made out application for registration, underline this word. The output tax liability does not exceed how much, sir? 2,50,000 per month. He shall have an option to obtain registration electronically, sir. And any person other than a person notified under 2560 who has not opted the authentication of Aadhaar shall not be entitled to registration under this rule. This rule you can avail and enjoy the benefit only and only if Aadhaar authentication is done. Something unique or something different you don't think. It's a simple concept. Aadhaar authentication means phone number what you give, one link will come. That link you have to click. One OTP will come to the mobile number given in Aadhaar. Enter that OTP, authentication is done. You need not put your thumb on monitor. Okay, no? Please. Notwithstanding anything contained in the rules, a person registered under this rule, in a state shall not be entitled to obtain another registration in the same state or UT under this rule against the same PAN. So once you are registered under this rule, sir, you will not be eligible to obtain another registration in the same state using the same rule. Okay, my dear friends? And once authentication is done, they told 3 working days, but practically 3 hours it is coming. Not 3 working days also. And a registered person intending to withdraw. Sir, why would somebody withdraw from this rule, sir? Starting you told your tax liability is not more than 2,50,000 and you have taken registration. They just like that got convinced with all the documents what you give and submitted. But imagine after that your liability in a month is going more than 2,50,000. Then how can you stay in that rule now? You have to withdraw from that rule. Understood, sir? Provided application shall not be allowed unless returns for a minimum period of 3 months. If application is filed before 1st April. Minimum 1 tax period after 1st April. All the returns due from effective date of registration till withdrawal, everything is filed. Then you can apply for conversion. And once you apply for conversion, what will happen is, they will check all the documents once again. Because starting, sir, logic is simple, sir. Starting, somebody came and told, it's like this. Sir, my tax liability is not more than 2,50,000, sir. Don't check me too much, sir. Please leave me, sir. Government is telling what? Okay, not more than 2,50,000, small person. Document, okay, and approving. Detail verification is not happening. But once you tell your liability is more than 250, you will withdraw that option. Speak out, sir. They'll verify all the documents what you submitted. Then they'll allow you to continue. Understood? You might ask, sir, what if I cross 250 but I don't tell? Is it visible online only? No. On fine day they'll ask, what is there? Sir, speak out. See one example here. A supplies goods to registered persons only. CGST 60,000, SGST 60,000, IGST 90,000, cess 20,000. Total 2,30,000. 230 is not more than 250. He can opt for registration under this rule. Speak out. Next example, total is 260. He can't apply for Rule 14A. That's a very simple example. I hope you understood, sir. Sir, practically a lot of cases we have used that rule and got it done. Clear, friends? Next point, credit note, debit note. Lot of story is there, but in that story, one line I will tell. That one line is that supplier can, reverse way I'll tell. Reverse. Supplier can reduce his output tax only when recipient has reverse the credit. So when supplier is giving credit note, supplier will reduce the output tax. Recipient should reverse the credit. Now what they have done, dialogue is same, But your line you see, no? Supplier can reduce only when recipient reverses. Earlier, what was the story? Earlier story was like this, sir. Supplier will reduce output tax and recipient should reverse. Now the language is, sir, English language only, sir. Listen, sir. Earlier the answer was, supplier reduces output tax, recipient should reverse the credit. Now the English language is, supplier can reduce output tax only if recipient reverse. Means what law is telling? Babu, first let him reverse. Then you reduce output tax. You understood? You receive this line, no? Summary table you see. Credit note is issued. After 110, sir, amendment. Conditional reduction. ITC reversal mandatory. If ITC not reversed, reduction is what? Not allowed. Friends, I hope we are clear with this. Everyone, sir. Student is asking, sir, can you please explain practically, sir? Yes, I will do, sir. Sir, practicing person working in GST so much, why can't I tell practically? I'll tell. Sir, I supplied goods to you. After that, I gave credit note to you. Once I give a credit note, I'll report that credit note in GSTR1. Once it comes in GSTR1, for recipient, it will reflect in something called IMS. I told you this already. Invoice Management System, where you have an option called accept, reject, and keep pending also. Speak out, sir. That credit note, if you reject, I can't reduce output tax. That credit note, you accepted, then only I can reduce output tax. If credit note accepted means what? Your input tax credit will come down. If your credit comes down, my output tax also will come down. Earlier story was what, you know? Supplier will file credit note, supplier will reduce the tax, then recipient should reverse the credit. Now what is the story? Supplier can reduce output tax only when recipient reverse the credit. Because earlier, government was not able to identify properly. And government was having revenue loss. So government told what? Babu, you reduce later. First let him reverse. Let him accept. Then you reverse. Then you reduce. Sir. Clear, sir? Next point, sir. Next one. Returns. Same point. Already I told you. If the turnover is not more than 2 crores, GSTR 9 is not mandatory. GSTR 9 mandatory only is more than 2 crores. 9C only if it is more than 5 crores. For 9 it is 2 crores. 9C it is 5 crores. Are we all fully clear? Everyone, sir. Next point. Timely production of records or information for what? Audit. Sir, audit means not department doing our audit. C&AG, Comptroller and Auditor General. They will do audit of audit done. Sir, GST department is doing our audit, no? GST department is doing our audit. C&AG will do audit of that audit and check if they have done something wrong. Are you understood? See the concept? GST officers to promptly provide records and information to CAG during what, sir? Audits. Why this was given earlier? Because CAG told officers are not giving data properly. So they clearly told what? Officers what they should do, sir? Provide records quickly, which are all with the department, required to be maintained by the officer, must be given without delay to what? CAG audit teams. You might ask, sir, how is it relevant to us practically? My answer is irrelevant. Because we are not officers. We are taxpayers. Or yes or no, sir? This point is relevant for whom? If CAG is asking the documents to department officers should give within time. Should I ask, will this come in exam, sir? 99% it will not come. So why you are teaching, sir? Because it is there, sir. Okay, sir. If documents are with taxpayer, if CAG asks for what, sir? Invoice, contracts, books, returns. If these are not with the department, then officer must write to taxpayer, ask for the documents and follow up. Sir, all these points, headache is on whom? Department officer, not on us. While reading this point only, I thought, how is it relevant for me? Put more points like this. Yes or no, sir? Next one. amendments and provisions relating to grant of provisional refund. Sir, I'll make you recall. If you remember in refunds topic, we discussed one important point called whenever any person applies for refund, sir, 90% of the refund is granted provisionally. Remember this line, sir? I told you one concept that if you apply for refund, let us say 10 lakhs, 9 lakhs they'll grant immediately. Balance they'll grant after checking. Like this concept was there. Now amendment what they brought, don't think percentage is changed. Now only thing what they told is government officers will decide based on risk parameters who can be given, who should not be given. That 90% refund. You understood, sir? Earlier it was common to everybody. Be person like you, person like me, everybody applying 90% refund they used to give provisionally. Now what they told, if they think it is risk given to you, they'll not give. If they think no risk given to me, they'll give. I'll tell you where to underline. This point you see. Provisional refund is not automatic. It is conditional upon what, sir? System-based risk evaluation. Even though the quantum 90% and the limit remains unchanged. Sir, time limit is same 7 days. 90% is the same. But what is amendment? It is not automatic to everybody. System will decide whom to give, whom not to give. You might ask, how will they decide, sir? This fellow is not for returns properly. He is not following the law. They will tell they'll not give. Then what you should do? Go and talk to the officer. Submit all the documents. Submit everything, whatever they want. I mean, records, documents, everything. Then they'll pass. Current books of account should be properly submitted. Can I go to the next point, sir? Thank you, sir. Key takeaways. 90% refund is default for what? Risk assessment is done by what? System, not by officer. System will decide. If they tell officer, they will show their talent. Very simple, no, sir. Officer can deny provisional refund only with reasons. Applies to exports or IDS. IDS means what? Inverted duty structure. You know this, no, sir? Inverted duty structure. Excess refund recovered through show cause notice. If system says you are low risk, they'll only decide. Who will decide? Officer? System. And system will decide based on parameters. How you have complied with the law till now. Correct? No, sir. Sir, simple, sir. You open your AI, ChatGPT or Perplexity, whatever you use the most. You ask ChatGPT, describe about me. They will tell. Because you would have asked so many questions to ChatGPT, telling what to study, what not to study, whom to see, whom not to see, how to ask, how not to ask. It will tell. What is your... I'm not joking. I asked one time, create a poster on my daily routine. It has shown my poster. Telling that I'm sitting in one table, one side income tax, one side GST, and one side office, one side classes, one side mic. All it has put. Because it knows. My AI tool, Perplexity or GPT, whatever it is, it knows what I'm doing. It knows everything. When I ask a question, it is replying how you know. As you are a professional, according to this should be the answer. Then I will ask, assume I'm not professional. Then according to layman, this is the answer. GPTs are so talented, sir. Emotional also. You can ask, breakup happened, now what to do? It will tell it's time for exams. Now focus on exam properly. After exam, you can see other person. It knows you're writing exam in June. You should have asked something to it, no? You would have not asked something, it don't know. But something would have asked, then definitely AI knows. Yes or no, sir? That's how AI tools are developed. Simple. If you open your Instagram, if you open search, you will find out, no, what you have seen last 2 hours, 2, 3 hours. That kind of videos only will come. That photos only will come. Based on what you have seen. Simple. That's how technology developed, boss. So who will decide this risk parameter? System. If they ask in the exam, don't write officer. Next point. Following category of registered persons who shall not be allowed refund on what basis, sir? Provisional basis. Namely, number 1, a person who has not undergone what? Aadhaar authentication. You might ask, sir, why authentication not done? Simple procedure only, Simple only, but their OTP is not coming properly. phone number is wrong, Aadhaar number is not proper, date of birth is different in PAN, different in Aadhaar. Don't tell photo. Photo obviously different only. You can't identify. And any person engaged in supply of following goods: areca nuts. Areca is like our betel nuts. Betel nuts. Exactly. Areca nuts, pan masala, tobacco substitutes, essential oils. Correct only. So these products, if you are dealing, sir, then what will happen? You can't get provisional refund. Sir, are we clear with this point? Everybody, please reply. Everyone. So in every topic, you hardly have 1-2 points. That's all. Next topic, sir, dispute resolution mechanism. Sir, generally, if department gives any notice, sir, if department gives any notice, that notice will definitely have some number called DIN, which stands for document identification number. You would have heard that in income tax also, that any notice given by department will have something called DIN. Correct, no? Now see here. DIN is not required. DIN is not required on communications via GST portal, which already have what? Reference number. If reference number is already there, then DIN is not required. For online notices, they are not having DIN. They are having a reference number. So some number is there which authenticates that it is genuine. Genuinity is required, no sir. The whole point is all about genuinity. See the summary. Show cause notice is given by the portal. DIN is not required. RFN is present. What is RFN? Reference number. It is there. Is it valid? Order via portal. DIN not required. RFN is there. Is it valid? Email. DIN is there. Is it valid? Yes. Manual. DIN is there. Is it valid? Yes. Sir, if it is through GST portal, even if DIN is not there, if reference number is there, it is still valid. So speak out, sir. Everyone, sir. This point is the whole story, sir. What I am trying to tell. If reference number is available, then what is the answer, sir? But third point is important. DIN is compulsory for email or manual communication. And both will never be there. Don't worry. You got that doubt only, no? I know the talent. My students only know. Good. Sir, clear? Come on, guys. Few more points. Monetary limit for issuance of notice and passing of orders. Already the same point we discussed during our classes, but during our classes we discussed this point for 73 and 74. Now the same point is given for 74A. It is not amendment. Same limits are applicable for 74A also. If it is up to 10 lakhs, superintendent. More than 10 lakhs up to 1 crore, DC or AC. More than 1 crore, additional or joint commissioner. Sir, I hope you understood. Everybody, sir. Same point even for 122 also. 122 section is related to penalties. If show cause notice and orders is supposed to be given for penalties, sir, again the limits are same. Not more than 10 lakhs, superintendent. More than 10 lakhs up to 1 crore, assistant or deputy commissioner. More than 1 crore, additional or joint commissioner. And this 10 lakhs, 1 crore is for CGST. If it is SGST, again same limit. IGST, double. You will find 20 lakhs, 2 crores, 2 crores. Is that clear? So what is the answer up to 10 lakhs? Superintendent. Correct, no? Then more than 10 lakhs up to 1 crore? Deputy assistant. More than 1 crore? And the 1 crore is what? CGST or SGST? CGST or SGST, but not both. If it is IGST, all figures will be doubled. Next, appeals. Come on, guys, please get back to appeals. Few more points to talk. We'll complete this. Sir, there is one CBIC circular which is related to review, revision and appeal of orders passed by whom, sir? Common adjudicating authorities. Now see one interesting example, sir. Show cause notice is given by DGGI Chennai Zonal Unit. DGGI stands for Director General of GST Intelligence. There is one department in GST called DGGI, Director General of GST Intelligence. Whenever they get some tip information that something is wrong, this department will start taking the action. Department of Director General of GST Intelligence. Director General of GST Intelligence. Adjudicating authority is Joint Commissioner. Order is passed. Tax is confirmed as how much, sir? 25 lakhs. Penalty and interest is 10 lakhs. Total is how much, sir? 35 lakhs. So speak out. Sir, order is passed by whom, sir? Order is passed by whom? Adjudicating authority is what? Joint Commissioner, Chennai. Sir, speak out, friends. Everyone, appeal is filed by taxpayer. Appeal must be filed before Commissioner appeals Chennai. Chennai North only. Because the Joint Commissioner is posted in what? Chennai North. Jurisdictional is also with what? Chennai North. So appeal will depend upon who is the adjudicating authority. If adjudicating authority belongs to Chennai, we should file appeal also before the Chennai Commissioner. Just because you are from Telangana, you should not tell I'll file with Telangana. Or you are from AP, I'll file with AP only. I like only my Babu, not other Babu. You can't tell that statement. Clear, no friends? Appeal lies with Commissioner Appeals of the jurisdiction where CAA is posted. What is CAA? Common Adjudicating Authority. Not where DGGA has given show cause notice. Departmental review. Here also same logic. They can also go to Principal Commissioner of Chennai North. Departmental revision. If it is found that they ignored a major point, Commissioner may review the order. Sir, I am sure you remember the concept called appeals and revision. In appeal, I told you that appeal can be filed either by taxpayer or by department. Remember this? If appeal is filed by taxpayer, time limit is 3 months. For a department, it is 6 months. Remember something? See one summary. Summary, please. Appeal is filed by taxpayer. Authority involved. Commissioner appeals Chennai North. Appellate authority. It is based on the posting of Common Adjudicating Authority. Department review. Principal Commissioner Chennai North. Revision. Principal Commissioner Chennai North. Department representation in what? Appeal. They want to represent themselves. Then superintendent appointed by Principal Commissioner. So finally, the final takeaway is nothing but even though show cause notice are given by DGGI, the adjudication, appeal, review, revision, everything is based on the jurisdiction of what? Commissionerate, where the CAA is posted. CAA means what? Common Adjudicating Authority. Not where DGGI is located. It doesn't matter where DGGI is located. What matters is only who is the adjudicating authority. I hope we are getting clarity, sir. So please reply. Sir. Next point. Appeal to whom, sir? Appellate tribunal. The amendment which has come is in one line, sir. Earlier in the law they told appeal to appellate tribunal procedure they will notify. They did not clarify whether it is manual or online. Now they clarified that it will very clearly be electronically only. They developed one more portal for GST appellate tribunal and they clearly told for appellate tribunal also it is very clearly online. GST 80. GST Act, we'll call it. Income tax we have ITAT, no? Here we have GST 80. Underline this word, electronical. Earlier it used to be manual filing, sir, but now there is no concept of manual filing. It is very clearly online. And one more point, sir, if you remember and recall, in tribunal I told you that if one party files appeal, other party can file something called MOCO, Memorandum of Cross Objections, within 45 days. Remember this concept I taught you in the class. There also they told it is online. Now everything is electronic. And signing, of course, since it is electronic, you can use digital signature or you can use a EVC, OTP will come. Sir, I hope we are getting clarity. And the fees for filing appeal, this is the same point, already what I taught you, sir, but I put in the material again. It is not amendment. There is no amendment in the fees. It is the same thing what is there in the material. 1,000 rupees for every 1 lakh. Minimum 5,000, maximum 25,000. And flat fees of 5,000 applies where there is no tax, interest, fine or penalty. So the whole point is what now? There is no more concept of manual filing. Appeal has to be filed electronically only. Just add one line. Yeah, here. Just add one line here. Appeal to GST 80, including MOCO. What is MOCO? Memorandum of Cross Objections. To be filed electronically only. Is that clear? So please reply. Next point, my dear friends, with respect to single member bench. Heard this one? Generally, I told you 2 persons will sit and hear your case. Generally, 2 to 3 will sit and hear the case. 2 or 3 persons. Technical member center, technical member state. There. But I told you in some case it is single member bench, where the amount involved is not more than 50 lakhs. Very good. If it is not more than 50 lakhs, it is single member bench. And moreover, important point is that single member bench is allowed only when there is no question of law. Highlight that word. The appeal does not involve a question of law. If there is a question of law, then they will send the case back to the president or vice president. And we all know that the question of law, we can go to High Court also, because tribunal, the last level for fact. If there is a law, you can go to High Court and then to Supreme Court. Sir, I hope you are getting clarity. Speak out. The 50 lakh rupees, sir, 50 lakhs. During discussion, we have done this already, sir. You will find that in our material also, our class notes also. Next one, order. Order also is passed electronically, sir. Order also is passed, how, my dear friends? Electronically. No more manual discussion. Manually, there will be one thing, that is called hearing. You will go for hearing and come. But orders, notices, filing will be online. So once order is passed, sir, who will give summary is the tribunal will give summary, and they will give along with the order. It is responsibility of the tribunal only. Earlier what used to happen is, after tribunal will pass order, the local officer used to again pass the order. but now it's gone. Once order is passed, summary will be given by tribunal only. So are we getting clarity? So if I summarize the story of this appeals and revisions, what is the amendments which have come up? First amendment is that where DGGA is located, that is not relevant. What is relevant is only where is the common adjudicating authority. Based on that only appeal will be considered. Next point, appeal to tribunal, no more physical, it is purely online, including the MOCO. The reply, everyone, sir. And one more point, single member bench you can take up only when there is no question of law. That's it. Next one, mandatory pre-deposit. So what is the pre-deposit, sir? 100% of admitted dues, 10% of remaining tax in dispute, subject to maximum 20 crores under CGST. Sir, I'm sure you know this. Reply, sir. One small thing, sir. Imagine there is an order passed where there is only penalty without tax. You might ask, huh? What is that order? Only penalty, no tax. Example, goods are seized in transit. Owner is coming forward to pay the penalty. And what is the penalty? 200% of tax. We know that, no? In that case, there is no interest, there is no tax, there is only penalty. And on that matter, you want to go for appeal. Earlier, you were required to pay 25% of that to go for appeal. But now they changed that 25% to 10%. Very, very important amendment. MCQ can come. In case of order demanding penalty without involving tax, appeal shall not be filed unless 10% of penalty has been paid. Earlier it was 25%. This point is there in our material also. In our material you will find 25%. When I taught you, when I took class for you, it was 25, but it has been changed to 10%. Important. Same thing you will find below also. You might ask, why you gave again, sir? First para is for appellate authority, second para is for appellate tribunal. That's why I gave both separately. 107 is appeal to appellate authority, 112 is appeal to appellate tribunal. They're done. Next, penalty for failure to comply with what, sir? Track and trace mechanism. Sir, government is trying to introduce a mechanism called track and trace, where they are trying to track the people, but you are trying to escape. But when finally they caught. See the story? Contravention of section. He shall be liable to pay penalty equal to how much, sir? 1 lakh or 10% of tax, whichever is higher. Underline that word. 1 lakh or 10% of tax, whichever is higher. It is like what, government is telling you have to put one GPS to the vehicle so that they can track. But they are not putting GPS on so that they will not track. You understood the example? Track means not track with the person, sir. We will not put GPS in our body. For the vehicle carrying the goods, that is the story. Understood, sir? Track and trace mechanism for certain goods. They told very clearly that for some goods they will notify. For some persons they will notify. So far nothing has been notified. They will notify. Government may, in respect of goods, provide a system for affixing the marking, prescribe unique marking for such goods. Which goods? We also don't know. So they should affix on the goods some identity mark. It's like what, for some precious goods they might tell, put some symbol, put some sticker, put some QR code. They kept this point in the law so that they'll have power tomorrow to tell you have to follow this. They don't put something in the law, how can they tell, sir? Like one box, they'll put one seal. All this you will tell very quickly. So are we clear with this? Everyone, sir? That's it. So these are the interesting amendments which have come up in GST. So what I'll do is, I'll take 2 minutes of your time to quickly recall once what all we have done in GST. Okay? Come on. First page. Local authority time pass point. This point is very, very, very important. What is that point? Supply of goods warehoused in special economic zone or a free trade warehousing zone before clearance for export or domestic area. Next. This one line answer. Life insurance, health insurance is exempt. If it is going to individual also exempt, family also exempt. But group is taxable. See, one page. But story is only one line. Next. 12.4 gone. Vouchers. Next. This is important. 100 by 140. 28% became 40%. Next. This what is the story? One line answer. If supplier is giving a GST credit note, recipient will reverse the credit. If supplier is giving a financial or commercial credit note, reversal of credit is not required. Linking this point with the 2 minutes back what we covered in credit note, that is, if recipient reverse the credit, then only supplier can reduce the output tax. Both correlation clear, sir? Done. Next what we have? This rate for rail transport. What is the story here? 5% without credit, 9% with credit. Then plant or machinery has become. Next, rule 14A, what is the story? If your tax payable is not more than in a year, month, you can go for this option. Sir, when you apply for registration, no, their option is coming. Do you want to opt for rule 14A? You can select yes or no. If you select yes, quickly within 3 days they'll give. They told 3 days in the law, but they are giving in 1 day, 2-3 hours only. Clear, sir? According to government, it is something like, if it is not more than 2.5 lakhs, there is no much risk, we'll ignore. It's like that. Understood, no? But tomorrow if you cross 2.5 lakhs, then you have to come out of that, submit all the documents, whatever they ask, then continue registration. And 2.5 lakhs is total, sir, total. Full, all taxes put together. 2.5 lakhs is not CGST. Sir. Next, this point I just revised, credit note point. Returns, if it is not more than 2 crores in a year, 9 is not required. Next one, time pass point, not related to us, related to department. Whenever CAG is asking for a documents, department officer should submit that to CAG. Sir. Refunds, 90% provisional refund is generally given earlier. Now, system will decide. Low risk, high risk. Low risk cases, they'll give. Who will decide? Good. Next one, Aadhaar authentication is not done. They will not give the 90% refund. 90% refund is not allowed even in case of areca nuts, pan masala, tobacco substitutes and essential oils. Next point, if notice is given online, order is passed online, it will have something called reference number. If reference number is there, DIN is not required. If it is manual or email communication, show cause notice for 74A and 122 section, if it is not more than 10 lakhs CGST, superintendent, more than 10 lakhs to 1 crore, assistant or deputy, more than 1 crore, additional or joint. We know the hierarchy, no? Commissioner, additional, joint, deputy, assistant, superintendent. In income tax, additional, joint, deputy, assistant. Don't tell inspector, sir, ITO. Income tax, below that there is inspector. Sir, are we clear, sir? Next one. Here DGJ, GGJ, where DGJ is there, that is not relevant. Where adjudicating authority is there, that is relevant. For appeals and revisions. Then tribunal point, all tribunal is now online, including that memorandum of cross objections. So please reply. Single member bench, only if it is not more than 50 lakhs and there is no question of law. If there is question of law is there, please proceed to president or vice president. They will decide. Pre-deposit, same story. Amendment is what? if there is only penalty involved. Earlier it was 25% of penalty, but now it is. So for clarity, do one thing, no? Here you can write if you want. Penalty section 129. Example section 129. Generally in 129 only this is common, where there is no tax interest but only penalty is there. Other cases generally penalty will come only after tax and interest, no sir. Next to track and trace. Track and trace, what is the penalty, sir? 1 lakh or 10% of tax, whichever is higher. The penalty is 1 lakh or 10% of tax, whichever is higher. That's it. And few small points in customs. 2-3 points are there. I'll discuss that and complete. Clear, sir? Only 2-3 points. First point, provisional assessment. If you remember, one important point I want to make you recall, sir. In customs, provisional assessment is done where the goods are to be subject to chemical test. Officer will go for provisional assessment. Then they'll do final assessment. If you paid more, you'll apply for refund. They'll give within 3 months. If they don't give within 3 months, interest will start after 3 months. But, sir, important, recollect. If provisional is 1 lakh, final is 120. The balance 20, you have to pay along with interest at 15% per annum. Starting from first day of the month in which duty is provisionally assessed till the date of payment. During class I told you very important, and we solved 2-3 questions also on this. Very important points, sir. Keep in mind. Since point has come, make you recall. Now student is asking, all that okay, what is the amendment? Amendment is that earlier they told officers may pass order, may assess provisionally within specified time limits or within reasonable time. Now what is that reasonable? That it is required, no? See what they have done. Existing word was what? Proper officer may assess provisionally. Now what is that they added? Definite time limit. For what? Finalizing provisional assessment. Within how much time? This is the amendment. Earlier there was no specific time limit. 2 years for provisional assessment, extendable by another 1 year. Changes has come into force from 1st May 2025. This introduces certainty and predictability in provisional assessments, preventing indefinite pendency and enhancing trade facilitation. They put this amendment not for us, but for a department. But for us important because we are a student. In exam, question may come. What is the amendment now? Time limit for finalizing is how much, sir? 2 years from date of provisional assessment. Extendable another 1 year. But see one line, no? There are some cases where time limit is not applicable. That is what information is waiting from foreign authorities. Appeals are pending. Stays are there. Both directions are there. Due to some reason it is pending, then it's okay. If not, generally it is within 2 years. Extended by. Next point. Insertion of new section 18A. This is interesting, sir. Very interesting. What is that, you know? You filed bill of entry. Should I teach you what is bill of entry? You filed bill of entry telling that they are your goods. You have assessed the value as 10 lakhs. Goods are cleared. After goods are cleared, you realize that it is not 10 lakhs, it is 11 lakhs. You might ask, why would somebody come back like that? Some genuine people will be there who will come back because they have a doubt that tomorrow when they catch, penalty will come. Earlier there was no concept called revision after clearance. Revision after, but now that facility has come. Understood, sir? See the line? Importers, exporters to voluntarily revise the entries. Highlight that word, sir. Revise the entries after goods are cleared. This provision allows for revision within a prescribed time and subject to condition. Revised entries are considered. Why it matters? It promotes voluntary compliance and reduces disputes by allowing bona fide correction post clearance. Sir, it's a good concept, very good concept, I believe, because sometimes mistakes happens, humans. And earlier there was no facility called revision post clearance, but now they brought this concept. And refund limitation period, same thing they told, sir. The point what they told is that time limit will be considered based on revised entries. And for applying refund also, revised entry is considered. So if it is revised, then relevant date will always be from that date. Sir, clear, my dear friends? Generally, for applying for refunds, the time limit is 1 year from date of payment. Which payment will you see? Original payment will see original payment. Revised will see. Friends, so once that is changed, this also will change automatically. Sir? Yes, my dear students, please reply. Did we all get complete clarity on all these points what we covered till now? Finally, one more last amendment and a point. RODTEP scheme. What is RODTEP? Remission of duties and taxes on export products. The product is exported, whatever local duties and taxes you paid, you will get that refund. This concept already is there in your syllabus. Already we covered in the classroom. But what is the amendment I am trying to tell you now? RODTEP scheme benefit will be available for export of products manufactured. Export of what, sir? Products manufactured from advanced authorization units, SCZs, and also EOUs. The products are manufactured from EOUs also. Products are manufactured from SCZ also. Still you can avail the benefit of RODTEP. So if you are manufacturing SCZ, you will anyways avail SCZ exemption. That also you enjoy. This also you enjoy. And all this they are telling enjoy because it is what product? Product which is to be exported. Government wants to give incentive. Straight answer. So customs, hardly there are 1-2 amendments. That's all. Strictly speaking, in our customs, I will tell only 3 amendments. Number 1, for final assessment, the provisional assessment, they told for final, it is within 2 years, extension 1 year. Second amendment is that even after clearance, you can revise the bill of entry. Correct, no? Third amendment is related to RODTEP scheme. Don't tell, sir, one more amendment is there. What is this amendment? Nothing amendment. Since revision they told, again this also revised. Same thing interlinked. So are we getting clarity? Everybody, my dear friends. So that's it from my side with respect to amendments applicable for June 2026 examination, my dear friends. So friends who are writing exam in June 2026, these amendments are important because see 95%, 98% content what we covered, same thing is there, but 1-2% few small points we covered, but that few small points may add 3-4 marks for you in the examination, and every mark will count because we all know the fact very clearly that it is not 1 mark, it is 6 months. Please keep that point in mind. Clear, friends? So I wholeheartedly wish that students who are writing in June, they'll definitely pass by August 5th. When the results are come, they'll come out with flying colors. Okay, guys? So I wish you all the very best. Wish you all success. Thank you so very much. Take care. Signing off, Shiva Teja. Thank you.